Good evening, everyone. Welcome to the official YouTube channel of Office Society 24/7. So first of all, let me know how are you all, and also let me know is audio video both are okay? Are we good to go? So as you know, we have started this JAIIB series, or I can say the victory series, in which every day we are discussing certain number of questions related to your IFS. And also, you know, we started this series with the module D. Okay, we have started this series with the module D, and we have completed module D in 18 sessions, or I can say in 18 classes. So you have 17 units in module D. How many units are there? 17 units are there. So every day we have discussed one particular unit of module D, and the last day we have discussed the combined session of module D. And now today it is the 19th class, and this particular class I will be starting your module C. So you can see Indian economy, Indian financial system. Now after D we are going for the C module. So do remember the weightage. If we talk about the weightage, you will find in such a sequence, more weightage is with the D, then C, then A and B. And in the same way, we will be covering our sessions. So today it is the first class of your module C, that is Indian Financial Architecture. That's your module C, unit number 20, Indian Financial System and Overview, that we are going to cover today. So do remember, module C start with the unit number 20 and with the unit number 28. And the first unit that we are going to discuss today will be your Indian Financial System and Overview. So before moving forward, let's discuss what is Indian financial system. So as you know, we have discussed it a lot of times that Indian financial system, or whenever we talk about a financial system, what is financial system? It's simply a platform, or we can say it's a system where we exchange funds among the people who have surplus money and the people who have deficit of money. So when you exchange funds among these people, this system is known as financial system. And how it will be done? With the help of financial institution, with the help of financial market, and with the help of financial products, or we can say the instrument. So simply, whenever you talk about financial system, your financial system actually covers three components. So financial system is simply a system where we exchange fund among the persons who have surplus money and the persons who have deficit of money. Now the second thing is that financial system have three components. First is financial market. Second, we have financial instrument. And third, we have market participants. Market participants. So on the one side, you will have a persons who have surplus money. And there are people who have surplus money, and the surplus money people will go to the financial system and will make sure that this money will reach to the persons who have deficit of money. And to confirm and to complete this exchange of funds, we use components of financial system. That is what? Your financial market, financial instrument, and market participants. So that's what your unit number 20 actually talks about. That's the whole thing within unit number 20 we'll talk about. So this is financial system, and this is what the work of a financial system, to exchange the funds among the people who have surplus money and the people who have deficit of money. Clear? Now let's move forward. Now the first question for today's session, you have to answer the questions. In the end, I will let you know if your answer is correct or not. Good evening, Anita ma'am. So let's continue. The first is talking about which among the following is not a part of sweeping reforms. So out of these, which of the following is not a part of your sweeping reforms? First is saying delicensing of import. Second is saying tightening of foreign exchange regulation. Third is saying abolishment of license Raj. Fourth is saying pegging of exchange rate. Fifth is saying trade policy reforms introduced. So out of these 5 points, which of the following you think is actually, Hannah, which of the following is actually your part of sweeping reforms? A, B, C, or D? Okay, so when it comes to the delicensing of imports that we have done, tightening of foreign exchange regulation, no, we have not. We do not have to tighten the regulation. We have to ease the regulation. So second is not true. Okay, it means B cannot be the right answer because the second will be one of them. So B is eliminated. Now, abolishment of license Raj, that is true. We have abolished, we have eliminated the license Raj. Third, pegging of exchange rate. No, we have to unpeg the exchange rate. It means fourth is also wrong. Okay, fourth is also wrong. Fifth is saying trade policy reform introduced. This is true. So second and fourth, these are the 2 points which are not a part of your sweeping reforms. So remember, all are the above are correct except second and fourth, because in second it should be ease of foreign exchange regulation. And in case of fourth, it should be unpacked exchange rate. So right answer will be your D. Second and fourth is incorrect. Clear? Next question. Next we have here that's talking about RBI introduced PJ Nayak committee in 2014 to review the government of Board of Banks. Governance of Board of Banks in India. The committee was mandated to examine which of the following. So here 2 questions you have to remember, like 2 things you have to remember. First of all, RBI introduced the PJ Nayak committee. For what purpose? For the review of governance of Board of Bank. Okay, to review the governance of Board of Banks, we have introduced, or RBI have introduced, the PJ Nayak committee. So do remember, PJ Nayak committee is related to the review of the governance of Board of Banks. Okay, do remember that. Next. Let me know which of the following is correct here. Okay, so right answer is actually first is saying to review the RBI guidelines on government ownership in bank, to analyze the work, conflict of interest, independence in the bank board and make suggestion towards the same. Third, to assess fit and proper criteria for directors and their tenures, to examine board compensation guidelines. And the right answer is very good. Amina ma'am have said all, that is D, very good. So Rajesh sir, Anita ma'am, Amina ma'am, Reena ma'am, everyone is going with the D option, and these are the correct statement which have been recommended by, or the committee was actually mandated to examine all of these in the banks. So right answer will be D. And do remember, PJ Nayak committee is related to the review the governance of Board of Banks. Next question we have, that setting up of EASE. What is EASE? Enhanced Access Service Excellence Agenda for calibrating the performance of dash banks and fostering healthy competition and collaboration among these banks. So EASE is a very famous reform, we can say, that have been introduced in the banks, and it is very important for your paper. Definitely one of the reform will be asked. EASE 1.0, 2.0, 3.0, 4.0, 5.0. These 5 reforms have been given in your syllabus, and definitely one reform will be asked. Okay, so all the reforms you have to study in detail, like what changes have been done, what was the recommendation, what new thing have been introduced, everything have to be covered. Now the question is asking setting up of the EASE agenda for calibrating the performance of dash banks and fostering healthy competition and collaboration among these banks. Public sector, private sector, foreign bank, differentiated bank. If we talk about differentiated bank, now these are payment bank, small finance bank, we can say. And I am getting the right answer, that is public sector bank. For public sector bank, this have been introduced. Acha, how many public sector banks are there in India? How many public sector banks are there in India? Let me know. So right answer here is A. Next question. Next we have here, which of the following are the examples component of the informal financial system? So we know the financial system are of 2 types. First is formal, second is informal. The formal financial system is the one in which rules, regulations, restrictions, regulatory body will be there. and informal where there is no regulatory body, no rules and regulation, no terms and conditions are there. The formal financial system in India started in 1770 when the Bank of Hindustan was established in Calcutta. Okay, and if I talk about informal financial system, it's going on since the human civilization, we can say. Okay, so you have to answer here that which of the following is are the examples component of the informal financial system. It's not 11, it is 12. Public sector banks are 12 in India because there are 11 nationalized bank plus one SBI is there. And all these bank creates the public sector bank of our country. Okay, so right now we have 11 nationalized bank and 12 public sector bank. Okay, Rajesh sir, do remember that. In the Indian banking structure, you will study the whole types of banks. Now, let me know the answer of this question. First is saying individual money lenders who could be traders, relatives, your neighbors. Second is saying group of persons who could be operating as association and fund. Third is saying partnership firm consisting of local brokers, pawnbrokers, and non-bank financial intermediaries such as the finance, investment, chit fund companies. And the last one is all of the above. So what do you think? Which of the following are example of your informal financial system? Okay, I got the answer, that is D. All of the above. Very good. This all are the informal financial system part. All are what? All are the informal financial system part. So your right answer is D. Okay. Next question. Now, which among the following is our correct statement? You have to answer out of these two statements, which statement is correct. Read both the statement and let me know the answer. Okay, D, you saying none of the above. So C. First is saying banking institution, depository institution, insurance, mutual fund and brokerage companies fall under this category. They cannot ask for monetary deposit but sell financial product and services. Okay, second is saying non-banking institution. This include banks and other credit unions which collect money from the public against interest provided on the deposit made and lend that money to ones in need. And actually the statements have been, the definitions have been interchanged. Okay, these definitions have been interchanged. The option number B talks about the banking institution and the option number 1 talks about the non-banking institution. It means none of the above are the correct statement. Both are incorrect. Very good, none. Next question we have here, so right answer will be your D. Okay, next question we have here that's talking about which of the following is our correct recommendation of Narsimhan Committee 1 1991. So Narsimhan Committee 1 and Narsimhan Committee 2 both are very important. Definitely one question will be there from the Narsimhan Committee. It can be more than one, but definitely one question will be there. Do remember Narsimhan Committee 1 and 2 we have covered very carefully. Now the first is saying establishment of a 3-tier hierarchy for banking structure, the supervisory function over banks and financial institution, a phased reduction in SLR, phased achievement of 8% of capital adequacy ratio, abolition of branch licensing policy. So which of the following are the correct recommendation? Let me know. So which of the following is correct? Nidhi ma'am is saying C, Rajesh sir is saying A. Okay, all of the above, and A is second and third. Okay. Okay. So actually, none of the above will be the right answer. Why none of the above? Because actually supervisory function over the banks and financial institutions was introduced. Actually, a phased manner of SLR, phased reduction of SLR have been said. The phased achievement of 8% of capital adequacy ratio is clear or correct, I can say. Abolition of branch licensing policy is also correct. But establishment of 4-tier hierarchy have been said. And none of the option is actually defining the right answer. So right answer will be your none, because the right combination of answer have not been given. Okay, the right statement, if someone asks how many statements are correct, so it should be second, third, fourth and fifth. But no such kind of option have been given here. That's why we will write the none of the above option. Okay, because only the first one is not correct, rest are correct here. Now, next. So this is the 1991. Next question we have from the 1998. So it is talking about which of the following is our correct recommendation of the Narasimhan Committee 2 that was introduced in 1998. The Narasimhan Committee 1 and Narasimhan Committee 2, they both have what? They both have the financial sector reforms related committee. Okay, so first is saying strengthening of banks in India, narrow banking, capital adequacy ratio, bank ownership, review of banking laws. Out of these 5, which of the following is actually a correct recommendation of your Narasimhan Committee? Let me know. Okay, so right answer is, please check for bank ownership. You are asking about A, sir. So right answer here will be your all of the above. All are the actual recommendation of your Narasimhan Committee 1. Okay, right answer will be all of the above. Right answer is D. Very good. Now, next question we have, that is talking about financial institutions classified into 3 categories, okay, which are the part of your formal financial system. Then which of the following are those 3 categories you have to answer? First is saying regulatory institutes like regulate the financial market, RBI, Adda, SEBI, PFRD, etc. Intermediates will be their commercial bank which provide loan and other financial assistance to the public like SBI, Bank of Baroda, Punjab National Bank, etc. The third one is saying non-intermediaries are also there. Institution that provide financial aid to corporate customer. It includes NABARD, SIDBI, Exim Bank, NHB, etc. And the fourth option is saying all of the above. So you have to answer which of the following here is actually a category of your financial institution. A, B, C or D. Which of the following is correct? A, B, C or D? And the right answer actually will be your all. Very good. All of the above are the financial institutions. So they have been classified into 3 categories. Right answer will be your D. Okay. Next question we have, development of financial system have been done in the segmented form into which of the following phases? So there were certain phases in which we have seen the development of the financial system happen in the country. So out of these, which phase is actually a part of development of financial system? First is saying pre-independence prior to 47, post-independence 47 to 1991, post-liberalization 91 to 2010, post-global financial crisis 2010 to present. So what are the phases out of these 4 by which we have done the development of financial system? A, B, C or D? So post-liberalization means after the LPG policy was introduced. Liberalization policy was introduced in 1991, right? So that's why post-liberalization. And global financial crisis happened in 7 and 8, okay? And that's why it is known as post-global financial crisis. No, no, it was not CRRA, sir. It was a capital adequacy ratio. They both are different. Cash reserve ratio and capital adequacy ratio, they both are different. CRR is a part of monetary policy's direct instrument, and CAR is a part of Basel norms. Okay, so they both are the different terms. It was a correct statement, right? The question you are asking about. So CAR and CRR both are different. Okay, and you guys are saying A, second, third, and fourth. What's wrong with the first? All are correct. C option will be correct. The right answer is all. The first is also correct. Now, the pre-independence period was also there prior to 1947. Why you are saying A? So, right answer will be your C option. Good evening, everyone. Welcome to the official YouTube channel of Officers at 24/7. So, first of all, let me know how are you all, and also let me know is audio and video both are okay? Are we good to go? So, as you can see, this is our session of victory series that used to happen or that regularly happening at in the evening 7 p.m. But today we are taking this session at 11. So in this particular session, you all know that we are discussing about your particular IEIFS module D right now, and every day we are discussing one unit in which we are practicing questions that will be a advanced questions. Okay, so this is your class number 16. Have discussed already the class. The 15 classes have been done on your module D, and now we are talking about that class 16 will be today. And if we talk about the topic name, the topic will be your unit number 44. That will be your para banking and financial services. Okay, the topic of today will be your para banking and financial services. So this arrow will be here, unit number 44. Okay, that we are going to discuss. So first of all, when it comes to the para banking, when we are talking about a para banking, what is a para banking? It is a service that we are providing, the bank is providing. When the bank is providing additional services apart from its day-to-day activity. So bank provide day-to-day transaction. What are the day-to-day transaction of a bank? Deposit, withdrawal, lending. Okay, these are the day-to-day transaction of a bank. Apart from these activities, when bank provide the additional services to the customer, that is known as para banking. Okay, so let's discuss the questions on the same. First question is talking about here. In which of the cases RBI's approval to invest in the subsidiary and a financial service company is not required? Now, RBI is the central bank of our country. All the banking except merchant banking is regulated by RBI. So question here is asking which of the cases RBI's approval to invest in a subsidiary and a financial service company is not required. First is saying the investment is in a company engaged in financial services. Second is saying the bank has a minimum prescribed capital and has also made a net profit in the immediate preceding financial year. Third, the shareholding of the bank, including the proposed investment, is less than 10% of the investee company's paid up capital. And the fourth is saying none of the above. So, out of these four, what do you think? Which of the following is actually not required the approval of RBI? Okay, and the answer will be your none of these, because all these are the kind of situations which requires the approval from RBI to invest in a subsidiary and a financial service company. Okay, so right answer is none of the above. D will be your right answer. Okay, next question. What does IAS stands in relation to para banking and financial services undertaken by a bank? So we are talking about IAS. So what does it stand when we talk about para banking and financial services which is undertaken by a bank? Is it an investment advisory service? Is it an Indian administrative service? Is it an insurance advisory service, or none of the above? So what is actually the full form of IAS? So it is related to your parabanking. It is related to what? It is related to your parabanking. So it is your investment advisory services. In the parabanking and financial services, bank provides the investment advisory. Okay, so IAS stands for what? Your investment advisory services that will be provided by bank to the customer. It informs the customer where to invest, how to invest, what amount should be invested. So this is the investment advisory services. No, it's not C option from you, ma'am. It's a investment, not a insurance. It's an investment advisory. Now, next question is talking about introduction of any new portfolio management service requires the prior approval of which of the following? If you are introducing any new portfolio management service, it requires whose approval? So question is asking about portfolio management services. So the services are provided by bank under the parabanking. Okay, under the parabanking, the bank provide portfolio management services to the customer, in which bank manages the portfolio of customer investment. So let's say as a customer, I have invested my money in share market, in let's say commodity market, in mutual fund. I have invested money in gold, in real estate. I had the FD, I have the insurance policy. So I have diversified my investments. Okay, so I have created my own portfolio by investing in the different sectors. So this portfolio will be managed by the bank in the parabanking. That's a one of the parabanking service. So to provide or to act as a portfolio management service, from whom the permission will be required or prior approval of which of these is required? And the answer will be obviously RBI, because the portfolio management service is a part of your parabanking services. And if it's a parabanking services, it always comes under the Reserve Bank of India. So your right answer will be B, that is Reserve Bank of India, RBI. Do remember, only merchant banking is the type of banking which is regulated by SEBI. Otherwise, all the other types of banking will be managed by RBI. Whether it is your parabanking, okay, whether it is your onshore banking, whether we can say we have a narrow banking, we have a shadow banking, okay, we have a universal banking, the Islamic banking, okay, the door-to-door banking, then we have relationship banking, etc. So all these type of banking services will be regulated by RBI. Only there is a merchant banking that will be regulated by SEBI. If you want to participate in the merchant banking activity, you have to take permission. Okay, do remember that. Next question. What does IDMD stands for? What is the full form of IDMD? Again, related to parabanking. Is it Institutional Leadership Management Department? Is it Internal Debt Management Department? Is it Institutional Debt Management Department, or none of the above? Which of the following is the right full form of your IDMD? So this is a kind of department under the banks or within the banks that provide a certain one of the parabanking services to its customer. So which of the following is the right full form? IDMD stand for what? It stands for your Internal Debt Management Department. It stands for what? It stands for your Internal Debt Management Department. Okay. Next question. Right answer is B. Next question we have, bank should obtain prior approval of RBI for making strategic investment in venture capital funds, investment equivalent to more than dash percent of the equity per unit. So we're talking about that bank should obtain prior approval of RBI. The bank should do what? Bank should obtain the prior approval of RBI for making the strategic investment in venture capitals. Okay, so investments equivalent to more than dash percent of equity per unit is allowed. Is it 10%, 5%, 15%, or 50%? So venture capital funds, we know it was introduced in the year 1972 on the recommendation of Bhatt committee, venture capital collect funds from various investors and invest that fund in the startup only. So now bank should obtain the approval of RBI if bank want to make a strategic investment in venture capital. And when the bank is allowed to make the investment capital, here the investment will be equivalent to more than dash percent of your equity or unit. And the answer is it should be 10%. Anna, it should be 10% of the equity. Next. Introduction of any new portfolio management services require the prior approval of RBI. That's a repeated. Which among the following does not comes under the parabanking and financial services? So which of the following is not one of the services of parabanking and venture capital? Is it bank investment in venture capital funds? Is it insurance business? Is it biz discounting, or is it factoring services? So out of these four services, what do you think? Which of the following service is actually not a service that will be part of your parabanking and financial? So bank's investment in venture capital fund is actually a parabanking service. We have just saw that. Okay, insurance business. Insurance is a third party product of a bank. And insurance is what? Insurance is a third party product of a bank. Insurance is not a product of a bank, but a product of insurance company. But bank sells this insurance policy to customer to earn commission. So obviously insurance is a third party product. It's a parabanking. Then factoring services. Factoring is a service. It's a tool in which bank provide immediate cash to the sellers in case of trade by taking the trade receivable. Okay, that's your factoring. So factoring is also a kind of parabanking, but not a bills discounting. Bills discounting is the bank's day-to-day transaction part. So right answer will bills discounting does not come under the parabanking financial services category. So right answer will be your C option. Okay, next question. In which of the following cases the RBI's approval to invest in subsidiary and a financial service company is not required? The case in which RBI's approval to invest in a subsidiary and a financial service company is not required. First is saying the investment is in a company which is engaged in the financial services. Second, the bank has a minimum prescribed capital, which include capital conservation buffer. So the capital conservation buffer actually was introduced under the Basel 3. Under Basel 3, this was introduced, and this is the additional capital that have to be maintained as a reserve by the banks or themselves from any kind of future risk. Okay, and the capital conservation buffer is 2.5% of the risk-weighted asset of a bank, and has also made a net profit in the immediate trading financial. And the third is saying that the share of the bank, including the proposed is less than 10% of the investee company's paid up capital. So which of the following you think is actually is a right answer in which RBI's approval to invest in a subsidiary and a financial service company is not required? The answer is none of the above, because in every case RBI's approval, your answer will be none of the above. Okay, now next question we have, which among the following is are correct about the agency by banks? Which of the following agency bank provide? Which of the following is the correct about the agency business by banks? First is saying agency business shall be undertaken the product and services which a bank is permitted to deal in as per the Banking Regulation Act 1949. Second, the service shall be provided on fee basis without any risk participation. Third, the corporate agency of insurance companies undertaken departmentally by banks shall be as per the board approved. And the last option is saying all of the above. Which of the following is correct about the agency by bank? So bank provides the agency business services. Now bank gives the agency services in which banks actually undertake the product and services in which a bank is permitted to deal. है ना? So Banking Regulation Act Section 5B and Section 6 have given a set of services in the name of product and services that can be provided by bank. So that's the agency part. Second is saying the services shall be provided on a fee basis without any risk participation. The bank will, if bank is providing insurance, if bank is providing portfolio management services, bank will not undertake any risk participation. Bank will work as a mediator to provide those products to the customer, but bank will never be taking participation. The third is saying corporate agency of insurance company undertaken departmentally by bank shall be as per the board approved policy. And all the statements are correct about the agency by bank. Okay, all the statements are correct in context to your agency. Right answer is good evening, everyone. Welcome to the official YouTube channel of Officers at 24/7. So, first of all, let me know how are you all, and also let me know is audio and video both are okay. So, this is our victory series in which every day we are discussing one particular unit in form of advanced questions like match the following, filling the blanks, statement based questions, and your one liner question. All these pattern of questions we are discussing in the victory batch, or we can say victory series of yours. Okay, so if you remember, if you are regularly following my sessions, so you will know that I started Indian economy, Indian financial system victory series from your module D. And module D is your financial product and services that we are talking to. Okay, so if you remember that we have started from the module, and you can see module D starts from unit 29 and it ends at unit number 45. So one more important thing is there, that we have discussed all the units here, and today it will be last day of your module D unit wise discussion, because today it is the real estate trust and infrastructure investment trust unit that we are going to discuss in this particular session. So it means all the sessions or all the units we have covered in a unit, and 17 classes we have taken including cover up your module. Okay, now in the next class I will be coming up one session in which we will be talking about combined module units. Okay, all the units I will be discussing in the next session of yours. So do make sure you stay connected with Officers at 24/7. Stay connected with my session of IE IFS subject, which goes Monday to Saturday in the evening at 7 p.m. Okay, so this is what you have to regularly join. Now let's start. Let's move forward. Acha. Those candidates who are new here, I would love to inform you all that a lot of requests we were getting from bankers that start a new batch that will help us to clear the JIB exam. So from 26th of March, I'm starting one more batch. This is for English candidate. I'm starting one more batch for all of you. The timing of the batch will be 9 to 10 p.m. Okay, and this is the last paid batch, or we can say the comprehensive batch in English. After that, you will find in April, you will find the revision batch will, but not the combined batch. So if you are thinking about enrolling, enroll soon, because right now on AIM batch 80% discount is going on. If you use code Y496, you get 81% discount. The rest information I will give you at the end of the session. So let's start. The first question talking about here, what is the minimum amount of a stake that a sponsor should hold in? So what is InVITs? It stands for Infrastructure Trust. That's the InVITs. When it comes to the InVITs, we can simply say it is an infrastructure investment. But why this have been created? This have been at because of if you're talking about InVITs, infrastructure sector. If you talk about the infrastructure sector, you will always find infrastructure requires a large scale capital for a long. Okay, like a lot of money will be required if you want to promote infrastructure sector, and it's not possible for the persons like us to continue to purchase a second or to continue invest a large amount of money for a longer period of time. It's not even comfortable for the commercial banks, because commercial banks also works on the asset liability management. They accept deposit from us only, and that deposit will be used by commercial bank for the lending and investment purposes. So it's very obvious that we are not capable of investing a large amount of money in the infrastructure sector and for a longer period of time. But this is the sector which needs capital, which needs more and more capital. And to raise that capital from general public, Government of India have introduced similar concept goes with REITs, that is real estate trust. Get funding in the real estate market, government had allowed that the individual can participate in the real estate. So they are kind of a trust, kind of a company they have created, and they collect money from various investors and then invest that money in case of InVITs in infrastructure, in case of REITs in your real estate. Okay, so here in the InVITs you will find a sponsor is there, and it has been said that the minimum amount of stake that a sponsor should hold and InVITs should be 15. It's a minimum limit that have been given to the sponsor, like this much you have to manage, you this much you have to maintain. Okay, now which of the following is are not a types of not a type of InVIT? So when it comes to the InVITs, it's an infrastructure investment trust. In the infrastructure trust, we have certain number of types which covers your infrastructure trust. And out of these options, you have to tell which of the following is not a type of your InVITs, not a type of your infrastructure investment. First is energy such as power generation and distribution. Second, communication such as optical fiber, network and telecom towers. Third is saying mortgage, REITs, and fourth is saying water sanitation such as irrigation. So I guess this is a very simple question I formed, because you can easily identify that mortgage REIT is not a type of InVIT. So right answer will be C. Okay, that's a very simple question, I guess. So right answer will be your C. That mortgage real estate investment trust is not a type of your infrastructure. Right answer. Now, which of the following sectors are the sectors that are in infrastructure? So what happened now here? As we know, infrastructure is a structure of the economy. It covers a multiple type of structure. It covers green infrastructure, solid infrastructure, hard infrastructure, and your soft infrastructure. A lot of type of infrastructures are there. But when it comes to the InVITs, and when it have been defined infrastructure under the InVITs, they have given a certain category to us. Like these are the infrastructure in which you will raise fund with the help of it. So the following is that. First is saying roads, second is saying ports, third is saying power, fourth is saying, fifth is saying airport, sixth is saying telecom, and seventh is banks. Out of these, you have to answer which sector are included in the infrastructure. A, B, or D. So of the following is correct. And the right answer for this, all are correct, but not the banks. Banks have not been in the infrastructure definition here. So all except seven will be the answer. It means, okay, roads, ports, power, railway, airport, telecommunication. To develop them, we collect funds from the industry, but not for the development of the banks. So bank is not a part of infrastructure. Next, which of the following is are correct about REITs? Retail, residential, office, mortgage, healthcare. Which of the following is are correct about REITs? A, B, C, or so here we are talking about the types of REITs. Okay, we are talking about what types of REITs. So which of the following is are correct about the REITs types? And answer is retail, residential, office, mortgage, healthcare, all of the right answer is your D, because all of the above are correct in context to your types of REITs. Okay, next question. Which of the following is the benefits of REITs? The sponsor. Like the sponsors who are starting a company, who are starting a trust in real estate, Which of the following are the benefits? First is have diverse source of funding. Second, once listed, provide regular source of capital to the sector. Third, monetize the revenue generating real estate. Fourth, invest in real estate or infrastructure without actually owning the asset. And out of these four statements, which of the following is the benefits of real estate to the sponsors? A, B, or D? Okay. So right answer will be for all except the fourth, because this is not a benefit to the sponsor. This is a benefit to the investor. Like investors have this benefit that they can invest in the real estate or infrastructure without actually owning the asset. So this is the benefit for the infrastructure for the investor, not for the sponsor. So right answer will be all except four. Option is your correct option. Okay, right answer is your D, that is talking about benefits of real estate investment trust to the sponsor. Next, which of the following is our correct statement of infrastructure investment? So the correct statement about the inputs we have to answer. First is saying India need to spend $4.5 trillion on infrastructure till the year 2040, improve the economic growth and community. Is it true? You have to answer. Second is saying special emphasis on structural reform and foundation establishes the way for investment in diverse sectors. Third, and InVITs can have a maximum fee sponsor. Fourth, InVITs sponsor are mandatorily required to hold a minimum 15% stake in this trust for at least 3 years after the formation. So now you have to answer which of the following is are correct about the infrastructure. A, B. So when it comes to the which the right answer will be your all of the above, because 15% minimum have been told to the sponsor for the 3 years. The invites can have maximum of three sponsor, and actually government said that the migration is happening. The people from rural area, they keep moving towards the urban area. So it is very important that to provide a proper well-being community, government have to spend $4.5 trillion on the infrastructure and by provide for providing roads, building, sanitation facility, and health cares, etc. And the second one is also correct. There's a special emphasis on a structural reform and foundation establishes the way for investment in the private sector. Right answer is C. All are the statement correct here about your InvITs infrastructure. Okay. Now, which of the following is our disadvantages of REITs? So REITs have a lot of benefits, but it also have a disadvantage. Which of the following is a disadvantage? First is saying limited option. Second is saying low liquidity. Third is saying capital gains. Fourth is saying professional management. A, B, or D. So the limited options are there, low liquidity is there, this is true. Capital gains and professional management is not a disadvantage, it is the advantage of REITs. Okay, that you will get capital gain and it's a professional management. These are the advantage of REITs. Disadvantage is only one and two. The right answer will be the B option is correct. Like you have a limited option here and low liquidity available because you are investing in real estate. Okay, filling the blank question. India has seen a number of InvIT transactions over the last few years. According to the government report, the total asset under management across 8 active InvITs is around a dash amount. What is the amount that you have to answer? Next is saying the first InVIT of public sector entity, the Power Grid Corporation. The issue has monetized asset worth rupees 7,800 crore, and the Power Grid Corporation has divested %% of its units. Now you have to answer, right? For the total asset under management across 8 active InVITs is around what amount? 1.4 lakh crore, 4 lakh crore, and 4 lakh crore, so none of the. And the second you have to answer that the Power Grid Corporation has divested how much percentage of its unit holding? And the right answer is your A option. 1.4 lakh crore is the total asset under management, and 85% capital, or we can say holding, have been given to the units by the Power Grid Corporation. Right answer is A. Now, which of the following is our advantages of InVIT? Now the advantages we have to find out about the InVIT. First is saying regular income, second is saying professional management, third is saying capital. Only one, all except two, all on. So what do you think, which of the following is are the advantage of putting your fund in the? And the answer is you will get regular income. It is a professional management like real estate investment funds, and you will get a capital gain. It means all of the above are the advantages of your investment. Good evening everyone, welcome to the official YouTube channel of Officers at 24/7. So first of all, let me know how are you all, and also let me know is audio video both are okay, are we good to go? So as you know, we have started your victory series in which we are discussing one particular unit in one day, and till now in this victory series we have completed the module D, or I can say all the 17 units we have completed of module D. So in Indian economy, Indian financial system, if you remember, if you are regularly joining my session, you will know that this is our 18th number of class, and in the IFS we have started practicing the questions from the module D, because I keep telling you all that the module D is very much important. Then there are 17 units in module D, and each and every unit we have covered. All these units have been covered individually. Okay, now in the 18th class, what we are going to do, we are going to practice combined this model, all the all the units combined we will be discussing in this particular session. Okay, and from Monday onwards we will move forward to your module C with the first unit of module C, that is your unit number 20. Okay, so do remember, if you are a new candidate, you are joining the Officers at a 24/7 channel for the first time, I would love to inform you all that on this channel you will get solution of all your JAIIB queries as well as CIB and bank promotion. And if you are a candidate who is preparing for May 2024 JAIIB, this is the high time to decide that what particular batch is important for you and start preparing. Just do not waste your time in the R&D. If you have already following the certain mentors or the certain platform, join their paid courses and then start preparation, because you do not have more time now. Now the March closing is coming, then the April month is there. In the May, 25th of May will be your first paper, that is your IFS paper. And trust me, you won't be able to find out where those 25 days of May gone, because it will be very hectic for you. You have to cover IFS, you have to cover PPB as well. So the important thing is that start preparing very seriously with the certain strategy that we keep talking every time. Okay. So in this session we will be discussing combining all these units of your, and let's start with the first question, that is talking about the short-term capital gain tax rate is dash on profit made by the sale of InVITs units, and the long-term capital gain rate is dash of long-term gains exceeding ₹1 lakh. So short-term means the period that is less than 1 year. Long term means the period which is more than 1 year. And in both cases, if you are doing like in the InVITs, you have to pay taxes in the two forms. The first form is you have to pay tax on the dividend. Okay, second, you have to pay tax on the capital gain you are having, and the capital gain will be short term or long term. On that you have to pay taxes. So what actually the rate of interest that have to be paid in the short term capital gain tax and long term capital gains tax? A, B, C or D? And the right answer for this will be your, in the short term capital gain tax it is 15%, in long term capital gains it is 10%. So simply your right answer will be the option number B, 15 and 10. So do remember, in short term it is 15%, in long term it is 10%, and the amount also you have to remember exceeding 1 lakh. Okay, this is the case of InVITs. Also remember, in case of InVITs, two form of taxes will be there: tax on the dividend, second tax on the capital gain. Okay, now the second question we are talking about here from the Parabanking chapter, 44th unit, that which among the following is correct regarding the terms and condition to be followed by banks while acting as agent of mutual fund companies? So when bank act as the agent of mutual fund company, what are the terms and condition have to be followed by bank? First is saying bank should only act as an agent of the customer, forwarding the investor application for purchase sale of mutual fund unit to the mutual fund registrar transfer agents. The purchase of unit should be at the customer risk and without the bank guarantee any assured return. Second, bank should acquire units of mutual fund from the secondary market. Third, bank is permitted to buy back units of mutual fund from their customer, and all of these. So what do you think, which of the following is correct regarding your terms and conditions that to be followed by the banks? A, B, C or D? And actually bank, when the bank is performing parabanking services or bank is providing any kind of third party product, bank cannot take any kind of risk. Risk participation will not be there from the side of the bank in case of any third party product or in case of any parabanking services. So right answer will be your A here. Okay, that is the terms and conditions you have to follow in case the bank act as an agent of the mutual fund company. So right answer will be your A, the first one. Okay, now next we have here next question, like which among the following is not, it's not a pension fund manager authorized by the PFRDA to manage subscriber funds at the option of the subscriber. So we know that simply pension fund managers are there who manages the funds in the pension scheme, or pension fund regulatory and development authority have given this pension fund management manager authorized to a limited parties, out of which of the following is not a pension fund manager? IDBI, SBI, HDFC, LIC. And the right answer will be your, when it comes to the pension fund, Hana, you are talking about the pension fund. So when it comes to your pension fund, it will be IDBI, Industrial Development Bank of India Pension Fund. It have not been given authority by the PFRDA to act as a pension fund manager. So right answer will be your A. All the rest will be your pension fund manager, but for that they have to take permission from the PFRDA. Now, which among the following is not a money back or a cashback plan? Not a money back or a cashback plan we are talking about. Whenever we issue the insurance products, है ना, whenever we issue the insurance product, it's also a type of money back and cashback plan. So which of the following is not a money back and cashback plan? First is annuity plan. Annuity plan is actually your pension, है ना, annuity plan is actually your pension. Deferred annuity is there, again a pension product is there. ULIP and paid up value. ULIP is simply unit linked investment plan, in which obviously whatever you are investing, funds you are investing, it will be asked from you like this fund, where you want to invest this fund. Like choice of investment will be given to you. Okay, so the right answer is none of the above. None of the above is a money back or a cash back plan here in the options. So right answer will be your D. Okay, next, the key feature of open-ended fund. So this is a part of mutual fund. Mutual funds have two types of funds available on the basis of maturity. One is open-ended and one is close-ended. As the name suggests, open-ended means there is no fixed maturity period. There is no fixed maturity period. Whenever you want, you can enter. Whenever you want, you can leave. But in the close-ended, obviously there will be a maturity period. Like that time, you can enter the plan, and after these certain years, you can leave the planning. Obviously, there will be a maturity. So the key feature of open-ended fund is repurchase option, flexible maturity period, liquidity, all of the above. And the right answer is actually all of the above. You can purchase, repurchase, flexible maturity is there. Whenever you want, you can enter, you can leave. Liquidity is there. So right answer will be what? All of the above. Okay, right answer will be our all of the above. That is the D. No, option have been written here wrong. That is D. All of the above. Okay. Now, next we have, which among the following are the classified 3 grades in ratings? So when it comes to the credit rating agencies, they provide rating to the companies and countries. So what are the ratings are there? And when it comes to the, if anybody wants to purchase the shares, bond, debentures of any company, or whenever you want to invest in any kind of investment, first you check what? You check that that particular company have what kind of rating. If that company have investment grade rating, you can allow to invest the money. Okay, otherwise it's a risky. So what are the 3 grades? High investment, investment is speculative, high investment, low investment is speculative, investment is speculative hedge, high investment, middle investment, low investment. So right answer is A. High investment, positive ratings and low chances of default. Investment grade and average rating, little bit more chances compared to the high investment. Speculative, totally risky. Okay, so right answer will be your A, that is high investment grade, and your speculative. Right answer is A. Next question. The RBI formed guidelines for commercial banks funding leasing company on the recommendation of which committee? So which committee have actually recommended the leasing companies to banks? Like bank can act as a leasing finance company. Is it Tarapur committee? Is it LM Sanghvi committee? Is it SEBI who recommended? Or is it GS Dhatore committee? And the right answer will be your A, that is GS Dhatore committee. Okay, right answer will be your A. Next question. Next we have, what is meant by the term seed capital? What is meant by the term that is seed capital? So seed capital is a part of your venture capital. In venture capital, early stage and later stage funding will be required. In early stage, we have 3 sub-stages. In later stage, we have 4 sub-stages. So seed capital is one of them. Okay, so first is saying it is the money raised to begin developing an idea for a business or a new product. It is the initial amount of money an entrepreneur uses to start a business. It is the equity funding that investor provide to startup firms or pre-startup, all of the above. Actually, it is the money that will be required to do the R&D. You need a money to check or to try on the product, to do the trial on the product in the laboratory and etc. So the money raised to begin developing an idea for a business or a new product, that will be your seed capital. So right answer will be your A. Okay, an initial amount of money will be required to the entrepreneur. Why the entrepreneur is required the initial amount of money? Because simply to start a business, and actually you are investing the fund in the startup firm in the pre-startup stage. It means before the person is going to start the business, the money which is required, that is your seed capital. So all the three statements will be correct. Right answer will be D. Okay. Next question we have here is TREADS has been introduced. So factoring, forfeiting and TREADS are there. Hana, TREADS is a form of factoring, but for a certain seller. By RBI to look after difficulties that MSME suppliers have experienced in obtaining payment from their bills drawn on large corporate. Second, by SEBI to look after the difficulties that MSME suppliers have experienced in obtaining payment for their bills drawn on large corporate. Third, by RBI for medium-term financing, and fourth, none of the above. So which of the following is TREADS? So first of all, MSME supplier is correct. Okay, RBI for medium-term financing, no. MSME suppliers are correct, like TREADS was introduced by MSME supplier, but it was not introduced by SEBI. It was introduced by RBI. So right answer will be your A, that RBI introduced to solve the difficulty of MSME supplier who have already sold the goods to the parties, to the government, to the corporate, but they are not paying funds immediately. Okay, so right answer is A. Now, next we are talking about the derivative. Next we are talking about the, what happened? Next we are talking about the Derivative Markets Committee. So which committee's recommendation, on which committee's recommendation the trading of derivative in India in 2001 started? A, B, C or D? LC Gupta Committee, Sudhani Committee, Rangarajan Committee, CB Gupta Committee. A, B, C or D? And the right answer is LC Gupta Committee. The LC Gupta Committee actually recommended the trading in the derivative market. So right answer will be your A option. Okay, LC Gupta Committee in the derivative market. So these are the certain questions we have discussed on the module D combined. Now from Monday onwards we will be starting module C with the unit number 20 of yours. So do make sure, if you haven't watched all the sessions yet, then do watch module D session first and then move to the module C, and do make sure you will watch all the sessions recording. It will really going to help you out. Apart from that, if you are looking for a dedicated batch where you can, if you start now, you will be still able to clear your paper. Not easily, but still will be capable of clearing your paper. So this is a crash course started from 18th of March, PPB, IE and IFS and Retail Banking and Wealth Management. These three subjects have been started on 18th of March. On yesterday, it means 22nd of March, AFM also started. It means all the 4 subject classes are going on in the crash course. And right now it have 81% discount. Now, Mahapack have double validity plus 81% discount if you purchase the product from application of Adda 24/7. And if you use the code Y496, you will get this benefit here. Okay, now, to enroll in these batches, first download the Adda 24/7 application. After downloading the application, just go to the home page. Let's say this is the home page. Scroll down, you will find the JAIIB CIB section category. Then go to the JAIIB May 2024. Here you will find all the live classes, all the test series, all the video courses, all the ebooks, and the all hard copies are also available. If you are a kind of person who faces problem in online test series, then you can go for what? You can go for the offline books. These books will be transferred to your doorstep or delivered to your doorstep. But do remember one thing, that if you are practicing questions from this book, all the 3 books have only MCQs with the detailed explanation with the 10 mock test also. Okay, so if you are using these books to practice the certain number of questions, always set a time. Always set a time. Do not just like started in the morning and till the evening you have cleared or you have attempted only 10 questions. Not such kind of practice is required. Practice with the time is important. Okay, so you can see PPB, IFS and retail banking individual books are available, as well as all the 3 combo is available. Whatever you feel like want to have, accordingly, if you want a single subject, go with the single subject, or if you want all the 3 subjects, enroll here. You will find 23% discount. Okay, 1% additional is available on application in the coins. So by using the code Y496S, you will get in 999, let's say for example, you will get all the 3 books. Okay, and a lot of questions are there to practice here. Now apart from that, if you want to enroll in the live classes, so this is your Mahapack having a double validity, and I keep telling you all, whenever you find double validity, go with the Mahapack. Why? I will show you the reason right now. So this is your crash course in which 200 hours live classes will be there. You will get test series here, you will get ebooks here. After that, when you scroll down, you will find the study plan also. These are the study plan. All the 4 subject timing will be available when you click on the here button. And after that, do click on the buy now option, add a code Y496 and apply. Once you apply, you will get here 81% discount. The additional 1% discount is available in the application if you use the coins. 6-month validity is there. Code is Y496 and 3,700 you have to pay for a single batch. That's a crash course. Okay, if you go with the Mahapack, like if you are going to give all the 4 subject, then go with the Mahapack, because it will cover your comprehensive batch, it will cover your crash course, it will cover April month all the revision batches of all 4 subject, then the numerical batches. Then in the month of May, after you have done with your PPB paper, you will get 2 more batches, power pack batches for AFM and RBWM. So that will also be added in the Mahapack. Apart from all these, one additional benefit is there, which is only available in the Mahapack. So you can see mini and Maha marathons will be available for all of you on this Mahapack for each subject. Then click on the buy now option and enter the code here Y496 and apply. Once you apply, you will find here again 81% discount if you use the coins. Okay, 1 year validity is there. Code will be Y496 and 5,700 you have to pay. So now you can analyze the value of money very easily here. The much better option is Mahapack for you, because in the month of April you will feel like let's buy the revision batch also. In the month of May you will feel like this has happened with when you are at a position of a student, you feel like might be something will be there in the revision batch, or I am not able to do revision by myself, so why not go with the revision batch. So every time you have to pay individual money, but better option is you can go with the Mahapack. Apart from that, if you regularly want to join the YouTube sessions, then do subscribe the channel Officer Study 24/7 and press the bell icon so that all the upcoming sessions notification will be given to you. Okay, and that's all for today. Let's end the session here. We'll meet again in the next session, and do remember from next class we will be starting module C only on Officer Study 24/7 at the same time 7 PM. Okay, till then, take care everyone. Have a good time.